Hi, this is Shah here from Fairway Independent Mortgage Corporation. First of all, I hope you and your loved ones are safe and healthy, and I'm praying for those who are not. Unfortunately, in this time, many are also going through economic hardships. And I'm going to share with you some real information about this mortgage forbearance option. Those that are experiencing an immediate hardship due to COVID-19, which prevents them from making mortgage payments, are being offered a forbearance agreement on their primary residence, second home, or investment property. This option may allow customers to temporarily suspend or reduce monthly mortgage payments. But please note that forbearance does not mean forgiveness. It's not a free lunch or an invitation to not make your mortgage payment. As per guidance from Fannie Mae, Freddie Mac, and government loan agencies, most servicers are offering an initial forbearance plan for a period between 90 to 180 days and are offering extensions in accordance with the allowable forbearance plan timelines as allowed within the CARES Act and the other applicable guidelines. What folks don't realize is that upon completion of the forbearance plan, the entire amount is due. It is not forgiven or added to the end of your loan. So if you can afford to pay your mortgage, please do. It'll be in your best interest. That said, upon completion of the forbearance plan, most servicers will likely work with customers, if necessary, to pursue long-term assistance options, such as loan modifications, to ensure that customers are offered the optimum support with their mortgages as described in the CARES Act. Again, better that you avoid this whole situation if it's within your means to make your mortgage payment. We did receive some new information as of this recording, which is on April 2nd, that Fannie Mae and Freddie Mac introduced a new payment deferral program. This may be an eligible option post-forbearance. It's a non-interest bearing balance due and payable at the maturity or payoff of the mortgage loan. And HUD has also implemented the use of a COVID standalone partial claim after the forbearance period. HUD advances the unpaid amount and the borrower signs a promissory note with the HUD if certain criteria are met. When it comes to credit reporting, the CARES Act requires servicers to not report negative data to credit bureaus for customers that are actively performing on forbearance plans. So servicers must report that these customers to the credit bureaus as either current or that their monthly mortgage payments are at the same status prior to the hardship. The credit reporting protections described will be in effect for customers that are impacted until the later of either 120 days after the enactment of the CARES Act or 120 days after the national emergency declaration for the coronavirus is terminated. In addition, Fannie Mae and Freddie Mac and the other government loan agencies are requiring servicers to suspend credit bureau reporting of past due payments for customers in the forbearance repayment plans. And customers will be reported as current if they were current prior to the COVID forbearance as of March 1st, 2020. And if they're performing under their forbearance plan and other, loss mitigation options. So what about late fees? Servicers must not accrue or collect late charges from customers during this forbearance plan. If customers default on the terms of the forbearance plan, servicers are authorized to accrue late charges from the date that the customers defaulted on the plan. And then we have foreclosures and evictions. So moratoriums are in place on the initiation of new foreclosures, foreclosure sales, and evictions, except for vacant and abandoned properties. And under the current guidance, the moratorium extends to May 18th, 2020, but the federal government may choose to extend it. Investment properties. When it comes to this, and in accordance with the CARES Act, landlords with mortgages issued or guaranteed or somehow related to Fannie Mae, Freddie Mac, or other certain programs are temporarily prohibited for 120 days from eviction filings, assessing late fees or other penalties for non-payment of rent. And then when it comes to all of this, the options that are not available is to add the payment to the back of the loan, or like an extending the loan basically, skipping payments or waiving interest. Deferments, skipping payments, and adding it to the back of the loan are not forbearance options, okay? Those deferments will permanently alter the terms of your original security instrument by adding the missing payments at the back of it, and payments under a forbearance remain due and payable once the time frame expires. And customers, you guys have to partner with your servicers to come up with the long-term mitigation options. So requirements are going to vary, but what is, by the servicer, but what is absolutely consistent is that you need to contact your servicer if you're experiencing any hardships due to COVID-19. And if you do have to make this phone call, I'm sorry that you have to be put in this position. But please be as patient as you can when you reach out to the servicer, and remember that they're trying to help you. They are facing unprecedented volume also, and learning and adjusting to the new environment just as everyone is. Good luck, and I hope that this has been helpful. I'm Shah from Fairway Independent Mortgage.